This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, and we've been selling homes here in Southern Nevada since 1988. We're also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. We also have John Ingram from CrossCountry Mortgage, NMLS number 552596. John, I want to talk to you about student loans a little bit.
Oh, really?
Student loans. I do. You know, my oldest just graduated, and he's actually paying off his student loans. Yeah. And he doesn't have that big of a burden, but some
are huge.
And it's a big deal right now, right?
Specifically, I mean, if you look at the national numbers, we've got $1.4 trillion of student loan debt.
Wow.
1.4 trillion. So the schools, very profitable business.
Yes.
But when you have a consumer who goes out and takes these loans out, it impacts their qualifications for as long as they have those loans. And these rules, post-crisis got really tightened up. Mm-hmm. In the reality and in the truth for most consumers, or a lot of consumers with student loans, those loans are in deferment or in forbearance for a period of time until they get going into their careers and this sort of thing. Mortgages were actually dumbed down away from that and basically are not acting as if you don't make a payment. They're pretending as if you do have a monthly obligation on these loans.
Because eventually you will.
Exactly right. They want to underwrite you or try to evaluate you with your bad case scenario, which is once these loans become payable, how does that impact your ability to afford this house?
Right.
They've made those loans so safe to be given out by the lender that they can be really, really cheap and really easy to get. So it's easy for the consumer to borrow this money to be able to go to school and improve their life. I love that concept.
Yeah.
But the other side is if you get buried in student loan debt and you struggle with it, there is no way to sort of eliminate it. You just have to face it. Luckily, there is, in real life terms now, there's a lot of programs that will let you figure out a payment that is income based.
Right.
So whatever level of income that you make, they'll adjust it a payment to where you can potentially afford that, right? So you can make a step forward every single month and year and eventually work your way forward. The problem or the challenge we have in mortgage world is that income-based amount that you may be paying is not necessarily the payment that we're going to qualify you with. The standard approach has been 1% of your total balance is what we need to qualify you with.
Wow.
And that, if you imagine that's $600 a month payment equates to $120,000 of mortgage.
Wow.
So whatever your buying power is now $120,000 less because of those student loans. Conventional loans made to the standard for Fannie Mae. Fannie Mae revised this about 10 days ago or so, and they basically said if the student loan gives you a minimum payment that you have to make, regardless of what it is, we're allowed to use it.
Okay.
So
you
no
changed
longer
from that 600 to the 100
Exactly.
now. Okay.
So that lets you go with the 100. Mm-hmm. Where you're still kind of blocked, and I know this gets into the detail a little bit. If your loan is in deferment or doesn't show a payment at all, it's going to default to that 1%.
Gotcha. Interesting.
Yeah.
And it varies, as you said, FHA, VA.
Yeah. FHA doesn't care about deferment. They're always going to hit you with a payment. Mm-hmm. The VA, for example, will allow for deferred student loans.
Okay.
And their standard is if you prove to the VA that you don't have to make a payment for at least a year, they won't count it against you.
Wow.
You've been listening to Las Vegas Real Estate Now with host Harvey Blankfeld. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.